A mind-blowing surge of over 101% in a single year, and hardly anyone saw it coming. That single statistic has been enough to send shockwaves through the tight-knit circles of dedicated investors in the United Kingdom, inspiring almost manic curiosity. How on earth did a small, relatively unknown British defense technology business skyrocket so dramatically, while countless industry giants have failed to attract the same level of market enthusiasm over the past 12 months? Today we are diving headfirst into the enthralling saga of two unassuming UK companies whose share prices and future prospects are beginning to turn heads in the most extraordinary way. Why are these smaller enterprises suddenly grabbing our attention in an investment climate typically dominated by the larger names of the FTSE 100 and FTSE 250? Is there something deeper happening beneath the surface, some unstoppable force that has triggered a shift in investor sentiment? And more to the point, how can those prepared to look beyond the usual suspects capitalize on opportunities that might remain hidden from mainstream coverage? In this in-depth exploration, we unearth the remarkable story behind a defense technology specialist called Cohort, currently riding the wave of an enormous shift in European defense spending. Then, we turn our attention to Porvair, a lesser-known filtration equipment expert whose recent financial releases have generated a surprising degree of negativity, despite underlying strengths that many believe are poised for a rebound. By the end of this narrative, you will understand precisely why these two companies are attracting new sets of eyes, and why they might be worth a closer look if you are an investor intrigued by under-the-radar stories. But first, let us confront an unsettling truth. Many investors focus almost exclusively on well-known names and household brands. Their logic is simple. These widely recognized stocks are typically perceived as safer, more liquid, and extensively covered by analysts. Yet history shows us that breakaway growth, the kind that legends are made of, often comes from corners of the market where the spotlight has yet to shine. That is precisely why we are going to venture away from the usual suspects and uncover what is really happening with these intriguing stocks. Let us begin by pulling back the curtain on Cohort, the company that has rocketed upward by a triple-digit percentage in just 12 months. The initial question is, why is everybody suddenly talking about them? The answer resides in the massive expansion of Europe's defense budgets, particularly in light of new geopolitical pressures, and Cohort's uniquely positioned suite of technological solutions. For the better part of the past few years, the word on the street was that defense was either stagnant or overshadowed by other sectors. That narrative has changed dramatically, as European governments are now poised to ramp up spending in ways we have not seen in quite some time. By focusing on advanced defense technology, Cohort is not just producing generic war machinery or conventional tools. Instead, they have honed their expertise in areas such as surveillance, sensors, and cutting-edge advisory systems that modern militaries desperately need. When you consider the depth of their portfolio, essentially an agglomeration of several specialized businesses under the Cohort umbrella, it becomes evident how strategic acquisitions have played a monumental role in their ascension so far. By picking up complementary companies over time, Cohort gradually built an arsenal of expertise, each segment filling in a piece of a larger puzzle. Of course, experienced observers of the stock market will caution that, especially in defense, the mere presence of a growing market does not automatically guarantee success. Cohort's acquisition strategy, which worked wonders during times of subdued competition, may be more challenging to maintain when the entire sector is heating up. Competitors, flush with new capital, may also begin eyeing potential acquisitions with renewed enthusiasm, and that could escalate the cost of closing deals. Yet, it is precisely this competitive environment that signals just how urgently militaries around the globe need the kind of sophisticated technology Cohort delivers. If that was the only interesting angle to the Cohort story, it might still be compelling, an under-the-radar enterprise occupying a niche that is suddenly in high demand. However, Cohort's growth also highlights one of the most elemental truths in investing. When government budgets swell in a particular domain, the surge in demand for specialized services can be immense. Defense is one of those markets that tends to operate in cycles. There might be periods of calm, but when the political climate triggers elevated tensions or reveals vulnerabilities in national security, defense spending spikes dramatically. Those companies that can meet the urgent needs of governments stand to benefit in a way that draws the envy of many other sectors. Adding to the intrigue is the fact that Cohort's remarkable performance has already put its price-to-earnings multiple at around 32. That is quite high for a company that was relatively obscure a short time ago, and many prospective investors are asking whether the best days for the stock's upward trajectory are behind us. Is it possible there is still substantial upside left, or are new investors at risk of buying into hype? One important counter-argument to the piggyback on hype sentiment is that the expansion of European defense budgets may not be a fleeting, short-lived phenomenon. To truly modernize defense infrastructures, governments often sign multi-year or even decade-long engagements. If these spending initiatives are, indeed, part of a durable and deep-reaching shift, rather than a knee-jerk reaction, Cohort could have space to continue expanding its operations and capturing revenue for an extended period. And while the intense excitement around the share price might moderate, the broader runway for growth could remain strong. Of course, every investment opportunity has caveats. Cohort has grown at breakneck speed, thanks in large part to a series of acquisitions that allowed it to offer a multifaceted approach to defense solutions. As new players enter the sector, a more competitive market for acquisitions might not only limit the available targets, but also inflate their prices. If Cohort chooses not to continue snagging smaller businesses, it must concentrate on organic growth from the assets it has already assembled. Will it succeed in maximizing synergy from the various companies it has folded under its banner? And how will it respond if, for instance, defense budgets fluctuate more than anticipated? All of these questions linger like fascinating puzzle pieces. Yet, for those who are prepared to take a chance on an under-the-radar stock that has a shot at capitalizing on one of the largest expansions in European defense spending we have witnessed in recent times, Cohort's story remains gripping. After all, how often does a stock leap by triple digits over a mere 12 months? When that happens, seasoned analysts pay attention, and so should we. Before we pivot to the second company on our list, it is worth reminding ourselves that diversifying investments is about more than chasing glitzy success stories. Sometimes, you can find gold in places where the crowd sees only dust. We are about to examine a seemingly quiet filtration equipment provider that experienced a share price drop of nearly 10% after delivering results that, on paper, did not look terrible at all. Why the negative market reaction? And could it represent an opportunity for those willing to look beneath the surface? That stock, ladies and gentlemen, is Porvair. Few casual investors have even heard of Porvair, yet if you take a stroll through the aerospace industry or the life sciences sector, you might bump into equipment and specialized filters built by this unassuming British company. Filtration technology may not initially sound as dazzling as advanced military systems, but take a moment to ponder how vital it is. From the cabin air in aircraft to the intricate processes used in laboratories developing medical therapies, precise filtration makes the difference between safety and hazard, success and failure. In its recent financial update, Porvair reported higher sales and profits than the previous year, which is typically a sign of stable growth. However, the rate of growth slowed compared to prior periods, with the aerospace segment in particular registering weak demand. Market watchers were quick to punish the stock, sending it down by about 10%. The abruptness of the sell-off made some wonder whether it was driven more by short-term disappointment than by a thorough reading of Porvair's underlying fundamentals. Here is where the story gets interesting. Aerospace supply chains are notoriously complex, often involving scores of companies interacting across multiple continents. It can take just one bottleneck in one factory to stall production on everything else. Over the past few years, the entire aerospace sector has cycled between frenzy and slowdown, especially as it adjusts to changing demands for air travel. That can leave specialized suppliers like Porvair temporarily vulnerable to swings in market sentiment. Yet, when you glance at the bigger picture, the essential nature of Porvair's filtration systems suggests that demand for its products might remain robust. In the aerospace world, precise filtration is not a luxury. It is often mandated by safety standards and stringent regulations that require advanced technology to ensure compliance. Similarly, in certain life sciences applications, especially those dealing with medical or research-based processes, high-density filtration is paramount, and the cyclical ups and downs of that domain typically do not overshadow the fundamental need for purity and safety. So, while a weaker market environment can bruise short-term figures, the core necessity of Porvair's offerings does not vanish overnight. Indeed, One reason Porvair is increasingly appealing to some investors is that it operates in a space where newcomers cannot simply pop in and disrupt the market. Building up that level of expertise, acquiring the relevant certifications, and establishing a reputation for reliability in dealing with materials intended for human consumption or interaction is exceedingly difficult. That is why Porvair enjoys a comparatively high barrier to entry. When regulatory frameworks demand that you meet countless safety and performance standards before you can sell to major industries, you end up with fewer direct competitors. While this can keep smaller challengers at bay, the flip side for Porvair is that meeting these standards often requires continual investment and adaptation. On top of that, for the many industries dependent on filtration, be it aerospace or life sciences, once a filtration solution has been tested, approved, and integrated into their processes, switching to a competitor is anything but trivial. This means Porvair can often count on recurring revenue streams from customers who neither have the time nor the inclination to risk shifting to another supplier unexpectedly. If you factor in the company's track record of being reliable, that can create a valuable moat against the threat of losing existing clients. The real question, of course, is whether the stock's 10% drop signals trouble, or whether it is a chance to buy what some see as a fundamentally strong enterprise at a discount. According to certain analyst forecasts, Porvair's recent dip left it trading at a price-to-earnings ratio below 15, which is quite modest by many standards. On top of that, a few watchers project that the stock may rebound significantly, perhaps by a double-digit percentage, if the aerospace supply chain disruptions ease and overall demand normalizes. Should you be skeptical of those rosy predictions? Skepticism is always a good trait in the realm of investing, but it is worth remembering that in these specialized industrial markets, short-term quarterly results can sometimes be misleading. A backlog in parts, an unexpected manufacturing delay, or a shift in regulatory timelines can warp a single set of numbers without necessarily indicating a deterioration in the company's core business health. Now, at this juncture, if you are finding this breakdown valuable, give a friendly nod of appreciation by hitting that thumbs up button, so more people can discover these deeper-level insights. After all, we rarely see mainstream coverage venturing into the intricacies of lesser-known businesses, but that is exactly where hidden gems can often be found. Returning to the central topic of two under-the-radar UK shares worth considering this month, let us reflect for a moment on the psychological side of investing. The big indexes attract a great deal of attention for good reason. They include heavyweights that most people already know, like major banks, massive mining conglomerates, or well-established consumer goods producers. Yet, time and time again, the investment world demonstrates that maximum growth potential frequently comes not from those stable behemoths, but from the mid-tier or smaller players that have that essential combination of innovation, market readiness, and an improving macro environment. In Cohort's case, an improving macro environment equates to Europe perpetually increasing its stance on defense capability, opening new doors for specialized technology providers. In Porvair's case, a potential rebound in aerospace-related spending and the near-constant demand for life sciences-based solutions could restore the growth momentum that short-term results appeared to hamper. The real question might be, what is the investing public missing that you could seize upon right now? Some might say the defense sector is ethically tricky, and that is a factor prospective investors must weigh for themselves. Yet from a purely market-based perspective, it remains one of the most robust revenue channels for businesses that can land long-term government contracts, especially if Europe continues to treat defense modernization as a top priority. Meanwhile, the filtration world does not usually spark moral dilemmas, but it can spark fierce debates about how cyclical the aerospace sector really is. The life sciences segment is a more stable environment, potentially balancing out the ups and downs of the aerospace side. Moreover, Porvair's reliance on advanced technical knowledge is another point often overlooked by casual market watchers. Filtration solutions are not just about marketing a product, they are about complying with incredibly rigid safety protocols. This means the businesses Porvair wants to sell to, aviation companies, pharmaceutical labs, and so forth, are forced to demand a certain standard of excellence. Once Porvair's filters prove themselves in these high-stakes situations, that is a big plus for brand loyalty. Now, let us step back and imagine what might happen in the near future. Suppose airline travel continues to recover or even expand, generating a greater need for aircraft production and maintenance at some point. That is not exactly a massive stretch, given the global push to reinvigorate travel and the pent-up demand observed in recent periods. As orders for new planes ramp up, or as existing fleets undergo vital maintenance and upgrade cycles, the specialized filters that Porvair produces would likely see a parallel uptick in demand. Even a moderate shift upward in that supply chain could prove quite beneficial if the company is ready to meet those demands. Furthermore, consider Porvair's presence in life sciences. This is already a domain where large sums of money are poured into research and product development each year. In such an environment, the slightest misstep in contamination control can be disastrous. That is why stringent filtration systems are a must-have. And beyond the existing markets, there is always the possibility of new therapies, new vaccines, or new research-driven processes that require enhanced filtration support. In short, while the manner and timing of growth might be less explosive than what we see with a defense company riding a budgetary boom, it is also somewhat shielded from the cyclical nature that can hamper purely discretionary industries. At this point, it is fair to ask, are we certain that something like Porvair could replicate the dramatic share price leaps of an outfit like Cohort? Possibly not. The dynamics in filtration, while robust, do not typically result in triple-digit surges within a single year. But that very fact might present a different kind of allure to the investor who prefers a steadier climb, plus an inherent protective moat derived from advanced certifications and brand loyalty. The abrupt 10% dip in Porvair's share price might prove to have been an instance of the market punishing short-term results more harshly than prudent. As the aerospace world picks up steam, Porvair's fundamentals might catch the market's eye once again. Of course, nobody can see the future with certainty. The potential for an extended slump in global air travel or an unexpected pivot in European defense priorities can always shift the outlook for both companies. But as it stands, these stories are a reminder that genuine opportunities often lurk in less obvious corners of the market. That is precisely why it makes sense to occasionally look beyond the usual suspects in the FTSE 100 and FTSE 250. From acquisitions that might reshape competition in defense to continuous improvements in aerospace links that could strengthen filtration demands, these two companies illustrate just how exciting under-the-radar shares can be. Imagine focusing solely on mainstream conglomerates, only to discover in hindsight that a small defense technology company was doubling its market value practically under your nose, or that a filtration specialist was quietly cementing its position in growth markets, waiting for the sector's cyclical swings to turn in its favor. At times like these, it might also be instructive to reflect on history. Some of the most celebrated success stories in the world of finance started off unrecognized. Companies that eventually joined the ranks of the biggest indexes, or that expanded globally, sometimes began as niche specialists. That is not to say every niche player will ascend to that status. But ignoring them outright can be a costly mistake, especially when major changes in spending, government or otherwise, are in motion. Now, if you are enjoying this in-depth look at under-the-radar names and want to stay in the loop on future breakthroughs and little-known stories, do not hesitate to subscribe. Staying informed is how we tap into surprising trends before they become mainstream mantras. The next time you glance at the big indexes, remember that a lot may happen outside their spotlight. Sometimes the potential for growth is driven by unstoppable shifts, like the wave of European defense spending that has fueled Cohort's momentum. Other times, it is a case of cyclical downturns, overshadowing strong fundamentals, as in Porvair's scenario with aerospace. Either way, it pays to broaden one's horizons. To recap, Cohort has soared enormously, arguably because it is well positioned in a market that shows no immediate signs of slowing down. Indeed, as European governments reconsider what true defense readiness should look like, advanced technological solutions will be at the forefront of new deals, collaborative projects, and expansions of existing programs. Meanwhile, Porvair might be the sleeping giant many have overlooked. Though it is not as splashy as a stealth aircraft or a NASA rocket, advanced filtration is an indispensable piece of modern manufacturing and healthcare processes. A momentary slack in demand may have caused a proportionate drop in the share price, but that does not necessarily mean the company lacks the resilience to bounce back. When we weigh up these companies from a broader economic perspective, we see a unifying thread. Specialized knowledge plus supportive market trends can create compelling opportunities, even if some short-term metrics do not always paint a perfect picture. Whether you are a seasoned investor or a curious observer, it is hard not to become at least a bit intrigued. After all, part of the thrill of the stock market is finding that diamond in the rough, a place where fundamentals meet a wave of macro momentum, and reaping the rewards well before the wider world catches on. So, after encountering this saga of Cohort's unstoppable rise in the realm of defense and Porvair's underappreciated potential infiltration, perhaps you will be inspired to undertake a fresh perspective on your own portfolio. Instead of focusing solely on the legendary heavyweights, maybe you will scrutinize the smaller players with an eye for who is quietly solving essential problems in a way few others can replicate. Though the path of a lesser-known stock can be bumpier and less predictable, the payoff for those who are right can be astonishing, and that is the magic of looking beyond the obvious picks. No investment is free of risk, and both of these companies could surprise us, either favorably or unfavorably, in the coming quarters. Nonetheless, the combination of European defense expansion and the near-universal dependence on filtration technology in industrial settings presents a cocktail of opportunity that is difficult to ignore. And whether it is short-term catalysts or structural tailwinds, both companies have interesting arguments to justify why they deserve a closer look. Ultimately, the greater lesson here is about the power of curiosity. The truth is, even in a superiorly researched marketplace, there are stories whose potential is not widely known. The only question is whether one dares to peer beyond the conventional wisdom and find them. For now, Cohort's surge and Porvair's dip represent two sides of the same coin, under-the-radar companies with the possibility of robust gains if their respective markets deliver on their promise. Thus concludes our deep dive into two under-the-radar UK shares that might be worth an investor's time to investigate more fully in July. Keep your eyes open for the subtle shifts that can create huge ripples, and remember that in the ever-evolving landscape of finance, the real winners are often those who ask the right questions before everyone else even realizes they should.